Hi everybody, welcome back to the channel. So this is a very interesting video that we have in store for you. So I want to demonstrate through this video that all you need is only a set of candles plus some moving averages to give you the ability to read the market and have a bit of understanding to be able to predict what is likely to happen next. So what do we have here? We have, so this is a snapshot, 4 candle snapshot for the gold market. I've got the daily candles here, so 4 of them, and I also have 2 EMAs. So I can maybe write for you here. Is it in orange and 21 in purple color? All right. So many people say that you don't need indicators to trade or to be able to read the market. Actually, for these small patterns like this, because you have cramped your window of history, you still need the information on the EMA, because these guys summarize what the candles kind of look like, but it literally filter that information down so that you don't get the noise and you get the right information. So what we will do, let's go step by step. So we will read 1 candle per candle to give you that understanding before you can make a prediction. All right, so let's try and see if we can bring this one forward, and we hide the rest and read it. All right, so let's start. So the market start with a strong green candle, right? So this candle probably broke market structure. There probably was a higher high, higher low, as you can see from the moving average 7 that through this candle goes up a little bit, right? So we understand here that market were in this market. They bought this market upward. Sellers rejected only a little part of the body candle, so that they rejected the price, and at the end of the day, the price ended up somewhere up here. So we can see that it's buyer presence. They're here in this auction and they're participating actively given the size of the candle. So that strong impulse going upward. Right, but we need to be aware also that basically we are literally trading around the moving average for the last 7 period. All right, so it's fair to say that we can expect the price to be quite balanced at this point in time, right? Because we're not far from it. So if we go straight to the next candle, what happens? So we can see something very interesting here. So we see that the high, we form a higher high, that's true, but the price is immediately rejected when it goes above the previous high. So should we do this? There's a high here, right? But we cannot say a higher low, because actually we ended up forming a larger range, right? So price goes above the previous candle high, it's rejected immediately by the sellers. Price goes below the previous low, it's rejected immediately by the buyers. So they're both of them struggling in this. There's a power grab here. Both buyers and sellers are actively in this auction. They're bidding and selling aggressively, and we end up having a indecision, right? Price goes nowhere. But nevertheless, we're closing even right above the EMA, which is something very interesting. So everything below that EMA 7 was completely rejected. Something to bear in mind. All right, so the next candle then is a green candle, and see how interesting this is. So basically we can see green, bearish, green. So this is definitely a range we are in for, right? So we can see that this new green candle has a massive long wick. So buyers again rejected all that price. So it means that the price went all the way back to the low actually of the previous candle. It never reached the low. So if I was to draw a line here, it never quite reached that low. May I zoom in? See? So it never quite reached that low. I'll zoom out. Okay. So you never quite reached that low, right? So let's bring in the EMA in. Okay. He never got rid that low, right? But the buyers started buying it aggressively. They bought it, but notice this region here. Notice here. Notice how, though we have this new candle here, let me make it transparent. Okay. Ah, no, I'm gonna mistake, sorry. This one should be, yeah, so I should keep this one transparent. Definitely. Alright, so notice that this region here, right? Price never went back to this region that were previously rejected by the sellers. So it turns out that sellers are even defending areas like this. So the price, and remember this is the daily on the gold market. So buyers are not even buyers are not even able to push up price at this level, especially on this daily session, right? So one could say, okay, maybe in the next session the price is going to shoot up because obviously, you know, we closed here, but the buyers' input is here, so we expect the buyers to go up. The other narrative could be that the buyers have been trying to sell hardly, you know, selling mass. The buyers have been trying to buy massively. They buy, and they go nowhere, right? And that could be narrative as well. So let me go to the next candle, and this is what we see, right? So that box that I created here, that box, well, it turns out that our dear friend, the buyers were not able to get all the way up there. And you can see the next candle now has a range even that is more compressed. So buyers are not able to even go closer to that previous high. It turns out that sellers also were not able to go all the way back down here. So the range is becoming more narrow. And what happens is when you have this narrow range, so you come from a massive range, and session after session, the range narrows down. So I can draw that for you. I'll show you. If you have something like this, let's assume this is your range, for example. Let's assume you have a range like this, right? And then the next session, you have this range. So the range actually compresses down. In another session, you get something like this, right? You need to be ready for suddenly a massive move next, downwards or upward, because when there's compression like that, there's accumulation of orders, and it's actually a precursor for a big move afterwards. So here what we can say is obviously range compression. And if you notice here, we go from something we call lower lows, right? Sellers are defending this area. They're not allowing even buyers to get there. So this points to the fact that it's possible that sellers are aggressively taking this pricing, willing maybe to get price all the way back to this week's level or even breaking below this week's level. Because to be honest, given that we are in this range like this, what we should be expecting is another green candle in principle. But something else is telling us that the sellers could be in very, very aggressively in this market, right? So what we could make as prediction is likely, so for candle 5 could be, let me do this, I'm trying to cover it here. It's quite possible that, alright, it's quite possible that for candle 5, we get a bear candle. Alright, if you believe bear candle. Well, if you believe basically what has been happening, that the sellers are in very strongly, candle 6 could be either a bear candle or a tiny bull candle, thinking that buyers are going to come back. Tiny bull candle, something like that, right? That's basically what I will be looking at for the next two candles, basically, right? So let's recap for a minute. So let me zoom into this. So we see strong buy candle here. It's been a bit of rejection on the top here. Next, we see that when the price goes slightly above this high, it's immediately rejected by the sellers. It goes all the way below the EMA, but buys back it and buy it straight up. The next candle, we notice that the high doesn't even go near the previous highs. We're still in a range, massive indecision here. So we know that the price might go one way or the other, but we don't know which side yet. Massive rejection by the buyers all the way down here. So the buyers are still in this market. The next candle, however, shows that even the buyers are in this market, they're not able to go even higher, right? So these little things are very important because they give you an idea of the weakness of one group. The buyers seem to be very weak here, and the sellers seem to be having their way. So what we can expect is price shooting down here. Alright, so I'll come and replay to you what actually happened, and then let's go and see what these candles were. So we will start with the green candle. So it turns out that the green candle was forming off of these candles. It was already a range actually. So let's go ahead. Okay, there you go. This is what we see. It forms here. This candle form. Now, what do you think is going to happen next? Put your comments and let's see what turned out. Bear candle, bear candle. So this is what we observe here. Let me zoom into this for a minute. All right. So our analysis stopped here. So we saw that buyers were weak in buying this area here. So let me show this one here. They were weak in buying this area here. Very weak, by the way. So this one here, right? But if you can see this missing pop here, this missing area here, now the sellers were not able to cover. They claimed this in the next session. So the buyers were still weak in even claiming this area. And that at this point in time, so at this line here, I think this was a line in the sand where basically the buyers started giving up on this position and it triggered the stop losses that push price, below these lows, all the way testing the EMA 21. So yeah, I think it's a very interesting price action here. I hope you guys like this analysis, and if you want more of that, let me know. Cheers and enjoy. Bye bye.